Hi, I'm RV. Today we're going to talk about a big change coming for sole traders and landlords. Making tax digital for income tax. Making tax digital is part of the government's push to modernize the tax system. By the end of this video, you'll understand the key changes of making tax digital for self-assessment income tax, including the deadlines, financial thresholds, and how cloud accounting can simplify your compliance, ensuring you're prepared for the changes ahead. So, what exactly is making tax digital for income tax? As mentioned before, it is a step in modernizing the tax system. So instead of relying on paper records and annual tax returns, you'll be required to keep records digitally and submit updates to HMRC more frequently. Let's talk timeline. From April 2026, sole traders and landlords with a qualifying income of more than £50,000 a year will need to comply with making tax digital for self-assessment income tax. They'll need to keep digital records and submit quarterly updates to HMRC. Then, from April 2027, it will apply to those with a lower qualifying income of over £30,000 a year. Finally, the expectation is that from April 2028, it will apply to sole traders and landlords with a qualifying income of more than just £20,000. Key points to note are that the level of qualifying income reduces over time, and that these qualifying values are based on income, not profit. Now let's look at the duties that come with making tax digital for income tax. Until April 2026, sole traders and landlords can keep paper records relating to their business and use these to prepare a self-assessment income tax declaration once a year. But from April 2026, those with qualifying income of over £50,000 a year will need to use compatible software to file their records digitally with HMRC every quarter. This is in addition to continuing to complete the final declaration annually. These additional reporting requirements might sound daunting, but it doesn't have to be, because this is where cloud accounting software comes in. It automates much of this process, helping you easily record your transactions digitally, allowing you to keep records organized and compliant to MTD for IT. And of course it handles your required quarterly reports and final submissions. These can be generated and filed directly through an integration with HMRC. By using the correct software, you can significantly reduce the administrative burden and minimize the risk of errors. Cloud accounting also gives you a real-time view of your finances, which can be invaluable for making informed business decisions. So, to summarize, MTD for income tax is about digitalizing your tax records and submissions. But by adopting cloud accounting software to achieve this, you can gain so much more than just compliance with making tax digital. So why not start exploring your cloud accounting options today? These are just a few of the choices available. For more tips on how cloud accounting can benefit your business, check out our other videos. Like these. Click on the logo to subscribe, or use the email link to get in touch about your specific business. Thanks for watching.